Hi friends, what you see on my screen is the return by gold and silver in the last couple of years. So between April 2023 to April 2025, gold has gone up from 60,000 level to almost 98,000 level, which is almost a return of around 65% in the last 2 years. Gold have been in a massive bull run in the last couple of years, and right now in 2025, the question is, should you be really looking at gold in terms of investments, because it has already given massive returns in the last couple of years, and now the chances of corrections look more promising versus it going up by another, let's say 10%, 20%. Again, I could be totally wrong here, but in my view, gold has already given a solid breakout. Now comes the silver. Have a look at silver. This has gone up from 73,000 level to almost 1 lakh level. In the last 2 years, silver has given almost 38% returns. And the key question here is that, is silver going to continue this bull run for some more time? As an investor, we need to understand that. But more importantly, if you look at Nifty in the last 2 years, exactly the same dates between April 23 and April 25, Nifty has gone up by 35%. So gold 64%, silver 38%, and Nifty 35%. Gold has comfortably beaten Nifty, while silver has just managed to give slightly better returns than Nifty in the last couple of years. And the key question is that, is silver bull run just getting started? Because the past data that I'm going to show you in the couple of minutes will show you that whenever silver goes into a bull run, it typically moves into a decadal long bull runs. These are not 1 to 2 years sort of a bull run. Again, I'm not saying that go and invest in silver. What I'm trying to tell you is that please understand your options in investing silver. And in this video, this is what exactly I'm going to do. I'm going to give you, number one, the macro and technical analysis of silver. Whatever little I know, I'll give you that information. And secondly, we will also speak about ways in which we can look at investing in silver. Very, very insightful video. Every word I speak will be backed by data. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, shall we get this video cracking? The first point that I would like to quickly cover is the technical analysis of silver, and what you see on my screen is something amazing. This chart shows you monthly candles for silver pricing, and what you will quickly note is that silver is a very, very cyclic commodity, as is the case with many other commodities. What you will see first is that here, from almost 2004, a massive bull run started in silver. Of course, 2007 and 8, there was some correction because of financial collapse. But if you see, the broader trend from 2004 onwards has been silver was in a massive bull run. It lasted up until 2011. And if you see, between 2004 and 11, this was the massive bull run that silver gave. So around 6 to 7 years of bull run that we saw in silver, followed by a cool down or a downtrend in silver, started somewhere around 2011 onwards, and it lasted up until 2016, when silver cooled down and came back to almost 15 sort of a level and completed one round of bull run followed by a bear run. Afterwards, if we see between 2016 and 2021, the price of silver has been stabilizing between 15 to 20 US dollars per ounce. But what is happening afterwards is that from 2022 onwards, if you see, there is a mini bull run that we are seeing in silver. And if I zoom out and show you this chart here, what you will note very quickly is that from almost 2022, fag end of the 2022, if we see beginning of 2023, silver has been moving technically into an ascending channel, meaning that it is making higher highs, okay, and it is making lower lows. So technically it is in a mini bull run. We don't know how long this bull run will last, but if you ask me, there is a good chance that this bull run will continue. Why? Let me show you quickly some supply and demand data that is very, very interesting for silver. So have a look at my screen. You will see the silver demand and silver supply over the last 10 to 12 years of data here. This is all in million ounces. Just focus on two lines here, total supply and total demand. So from 2015 onwards, if we look at the silver supply, which is in million ounces here, you will note that it has been pretty constant, meaning that across the world, the supply of the silver has been very, very constant. But at the same time, if you look at the total demand here, what you will note very, very quickly is that in 2022, 2023 and 2024, the demand has gone up. It used to be around 1100, 900, 1000 million ounces here. All of a sudden from 2022 2022 onwards, it's gone up 1278 million ounces, 1195 million ounces, 1219 million ounces, and so on and so forth. So what we are seeing here is that since 2022, the demand for silver has been going at around 16 to 17% rate, and this is why the prices of silver has been going up since 2022. Now, more importantly, if you see where this demand is coming from, you will note that the industrial demand has been growing at around 11%, and within industrial, if you see electrical and electronic sector, that has been growing at around 20%. Also, the PV solar cells have been taking a lion's share in that. They've been growing at around 64%, meaning that the latest boom in electrical and electronic sector, also EV and 5G sector, healthcare and medicine, these are some of the emerging sectors which are having a huge positive impact on silver's demand, and that's why silver is all of a sudden in a huge demand, and that is what has taken silver prices upwards. Now, if you were to ask me next 4 to 5 years, any of these sectors will slow down? I don't think so. In fact, the demand from these sectors may continue to grow up, and therefore it is entirely possible that silver may remain in a bull run for the next 3 to 4 years at least. Of course, it's not going to move in a straight line. It will come down, go back up, come down, go back up again. And also, I was reading Hindustan Zinc Limited's management's commentary very recently in the month of April. I was analyzing HZL as a stock, and what I found is that because Hindustan Zinc Limited also produces silver in a huge quantity, their management Sandeep Modi seemed to be saying that the silver consumption has increased significantly in the industrial use. Therefore, it is likely to continue to be in demand. It is likely to be having bullish sentiment on the street. Again, this is my point of view. You may agree or you may not agree. In fact, let me know in the comments if you agree or disagree. Either ways, what do you think about silver prices in the next 3 to 4 years? Of course, we cannot speak about what will happen next day or the next week or next month, but overall trend still looks bullish in my view for the next 3 to 4 years. Let's now move to what are the options if we were to invest in silver. Again, I'm not saying that you should or you should not. That is entirely your call, but at least we should be aware of our options when it comes to investing in silver. So option number 1 is buying silver, which is physical silver. And have a look at my screen. What you will see is that if you go and, for example, buy 1 kg of silver bar, which is 24 karat, what you're going to find out is that you will have to pay some actual price of the silver, making charges, again, depending on where you're buying it from. Also tax amount, which is GST. And if I'm not wrong, 3% of GST is levied on silver. Therefore, you will end up paying some amount. Now, problem with the physical silver is that, of course, you will have to pay around 4 to 5% more on the top of the actual price of the silver, but more importantly, you will have to store it somewhere. There will be a handling hassle, and more importantly, when you go back in the market to sell your physical silver, you might end up paying again some more charges because you might not get the price at which physical silver is bought. Therefore, there might be some differences. Also, silver is slightly different from gold because in silver, I think it becomes blackish over a period of time. So you will have to take care of the maintenance of the silver as well. So therefore, in my view, I am not personally in favor of buying physical silver. In my view, silver ETFs are a great way if you were to ever invest in silver. So in the next 3 to 4 minutes, I am going to give you a lot of details about silver ETFs so that you understand how silver ETFs work, and more importantly, which are the silver ETFs that you can go and consider. So first point is that in November 2021, SEBI allowed silver ETFs. So silver ETFs have been recent addition on the exchange. So it's not that they have been around for 10 years or 15 years. They've been exchanges for little over than 4 years now. Now, one sample ETF that you see on my screen is ICICI Pru Silver ETF, and important thing that you will note here is that the benchmark of ETFs is London Bullion Metal Association (LBMA's) fixed prices of silver. This is very important because every ETF or a mutual fund will have a benchmark against which the prices will be tracked or the returns will be compared. Here in case of silver ETF, it tracks the silver pricing which is on London Bullion Market Association. That's where the benchmark is coming from, and therefore whenever you are comparing your ETF prices versus silver prices in India, you might find differences, right? Please always compare silver prices that are being traded on LBMA. Now, the second very important point about silver ETFs is that if you look at the returns here, for example, this scheme delivered last 3 years 12.92% CAGR return, but on LBMA, silver actually gave 13.71% return. So why there is a difference between the returns? It happens mainly because of the tracking error, which is the normal concept that you and me understand about ETFs. But in fact, I'll take 30 seconds screens now to show you on a particular day how does that play out. So typically what will happen is, for example, if you have a look at my screen, you will see these are the silver prices. What you will note here is that on 3rd April you see this red candle, on 4th of April you see this candle, silver prices came down, right? Now if you were to look at Silver Bees, which is one of the ETFs for silver, you will note that again 3rd of April, 4th of April, there were 2 candles here. So if the silver prices fell, what happened? ETF prices also came down. That is what you're likely to find out 90-95% of the times. But there could be some days where if the silver prices is falling, ETF may not fall. In fact, it might be reversed. Let me quickly show you an example here. So here you see 29th of April, very recent data point here. You will see silver price is in US dollars. The silver price actually went down. You see the red candle here, it came down. But if you note the pattern of Silver Bees on that particular day, 29th of April, in fact, it gained. It went up from 93 rupees per to almost 95, 94.50 sort of a range. So it is entirely possible that the silver prices go up in a particular day, but the ETF might come down or the other way around. So whenever that happens, and if you are tracking it, please don't be surprised. These are all part of the tracking errors. It really depends on the ETF's demand and supply on the exchange. Therefore, volumes become really important when it comes to ETFs. And again, I'm going to now talk about the various ETFs that you can think of considering. Again, not a recommendation here. You go and do your analysis. I'm simply sharing my analysis. And if so far you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to do a lot of research for you at zero cost. And also, if you want to practically learn various assets, for example, stocks, mutual funds, ETFs, and many other assets, you can consider joining my YouTube community. Almost on a daily basis, I post on the community giving you practical insights from various assets, and that will make you a very informed, insightful investor over a longer period of time. The feedback of this community has been excellent. Go to my channel, find the join button, and be my guest. Moving on to which are the good ETFs that are available if you were to invest in silver. So what I've done is I've created a screener here, very simple screener, and you will see that I could find total 9 listed ETFs at the time of recording this video. And if you look at, if I arrange them, maybe let's say average volume in the last 3 months, because volumes are the most important things when it comes to investing in ETF. I've talked about volumes a lot in my all the ETF videos because of the various reasons. Now, if I were to arrange these ETFs in the order of the volume, so let's put the highest one on the top. Nippon, which is the Silver Bees, is the number 1, followed by ICICI Pru, HDFC, SBI, Aditya Birla. So you can see the ranking here in terms of the volumes. And of course, Silver Bees by far is the most traded silver ETFs. What happens is if you have very good volume, then in terms of the liquidity, whenever you were to sell your ETF or buy ETF, you are likely to get good prices and you are likely to be able to quickly get rid of your ETFs if you were to sell it. That is the main advantage of going with a ETF that is highly liquid. Now, it doesn't mean that you have to go with number 1 because that is the most liquid ETF. In fact, we also have to look at some other factors. So for example, if you look at the expense ratio here, Silver Bees, which is the Nippon, has got the highest expense ratio, 0.59. Therefore, in my view, slightly on the costlier side. If you look at number 2, number 3, number 4, number 5, so if you go to number 2, 3, 4, 5, these are reasonable, 0.40, 0.42, 0.35. In fact, Aditya Birla has got the lowest expense ratio here, 0.35. Let me arrange them in the order of expense ratio and see which one is the cheapest so far. So Aditya Birla 0.35, Axis 0.37, Mirai Asset 0.38. These are the 3 cheapest ones. Again, let me just put them back into the volume and then look at the expense ratio. So in my view, I think number 2, 3, 4, 5 from expense ratio are fine. If we look at the last 1 year return, you will see that, again, let me arrange them in the order of highest returns. So if you will note here, Aditya Birla has given the best returns, followed by Axis, followed by ICICI Pru, and then Edelweiss. Now here, because expense ratio is really low, this ETF maybe has been able to give us slightly better returns, albeit they are very comparable return, but still every 0.25% really matters a lot if you have huge capital and if you're investing for a longer period of time. Therefore, we cannot really ignore the expense ratio because everything really helps over a longer period of time. So coming back, if I were to arrange them in the order of volume, so in my view, from a return perspective, number 2 and number 5 looks much better than number 3, number 4, and in fact number 1. So number 2 and number 5 are much better in terms of the returns perspective. But again, these are the past returns. There is no guarantee that these ETFs will perform better than others. Therefore, please be aware that it's not guaranteed that they will definitely give you better returns than others. Last point that I want to make about is the volatility. So let me now arrange these in the highest to lowest order, and you will see that, for example, Silver Bees, which is Nippon, is more volatile, highest volatility. Volatility simply means that the swings that it takes during a period of time, and if you're not comfortable with lot of swings in the prices, then maybe it is better to stick with the stable ones. Again, there is not a huge difference in the volatility here, but in my view, if I were to give you top 2 ETFs, I would look at, for example, ICICI Pru here. So let me again arrange them in the volume. ICICI Pru looks very, very good in terms of the expense ratio as well as volume, as well as last 1 year return, as well as volatility. And second one I would consider is Aditya Birla here, because the expense ratio is really low. Volume is decent. Again, it's not very high, but it is decent. Returns have been really good, maybe possibly because of the lower expense ratio, and from a volatility perspective, it is not too high. Again, these are the 2 that I would shortlist here, but let me be very, very clear. This is not a promotion. This is not a recommendation. Simply, I have shared some data with you. You are absolutely free to make your own decisions, but I have shared my views. I hope you liked this video. I hope you learned something new. If you did, let me know in the comments a simple thank you. Also, let me know any other topics you would like me to shoot videos on. I'll be very happy to look at your comments and come back with more videos. With that, I hope to see you in my next video. Until then, keep rocking.